3, 2, 1. Buckle your seatbelt, batten down the hatches. Coming to you live from the Blazar podcast studios in Space City, Texas. It's time once again for the Capital Catalyst Show, the podcast for entrepreneurs to learn the secrets of attracting, raising, and closing capital from high net worth investors. Dedicated to your success, this is the Capital Catalyst Show. Now here's your host, Brad Blazar.
Hey everybody, welcome back to another great episode of the Capital Catalyst Show. This is your host and sponsor, Brad Blazar, where we bring to you everything related to attracting, raising, and closing capital from high net worth investors and business owners. Today's guest is no different than what we've hosted in the past. This individual is in the real estate space. He's located in Beantown. And for those of you that are not familiar, that's Boston proper. I'd like to bring on our new guest today, the CEO and founder of a company called Limitless Capital, Chris Messier. Chris, welcome to the Capital Catalyst Show.
Excellent, Brad. Thank you. I appreciate you having me today. I'm excited to be here.
Very, very welcome to host you and have you part of our community. You know, I always like to get started by asking people how they got into the business of what they're doing today. So can you maybe share a few minutes with us and our listenership as to how you got started and maybe just kind of go into your backstory a little bit?
Yeah, sure. So I would say, I started like a lot of folks do, working a full-time W-2 job. I had a pretty high demand career job where I was, operating and managing nuclear power plants when they shut down for maintenance, with a large company, and, always had a bit of a desire to invest in real estate. Shortly after purchasing my first home, so that would have been back in 2008. That was through a short sale process, and got to really get into the field of analyzing the deal, learning the process. So after that purchase, I really started researching investing in real estate. And back then, the BRRRR strategy wasn't coined as much as it is today. But that really was my what I landed on. So end of 2009 into 2010, I purchased my first, 3-family, using hard money, paying 15%, 5 points. Really having to say, to the lender, who are you and kid, and how do I know that you can do this? And back then I had a decent story to tell already about, what I've done and what my prior career was, what my experience was around, project management, construction management, and those aspects, as well as, financial management through some of these larger projects that I was running and responsible for. So anyhow, that was a BRRRR project, and it was an interesting story. It was my first time investing, and new guy. I was young, and I went in there and I went to the police department to find out, hey, should I invest in this particular area? And I was told, don't do it, do not do it. And I was with my wife, girlfriend at the time. We got back in the truck, and she says, hey, Chris, what are you going to do now? I said, well, I'm going to buy it, and if that's the worst, then it's only going to get better from there. So that's always been my mentality, right? You take on a good challenge. So I ended up purchasing that property the next year, purchased the one next door, and then went on to acquire more. And again, the BRRRR strategy always worked for me. So also got into fix and flips. I do one here, do one there. Maybe partner on some where that made sense. But essentially, I came into the end of 21, and that was when I decided it was time to move on from the career job and really go all in on real estate.
I love it. When you started this journey of real estate investing, did you go into it with the intention of wanting to effectively walk away from your full-time 9-to-5? Is that like what you were thinking, or were you just thinking about investing in real estate, kind of building up a portfolio? I always like to ask people if you started investing with the end in sight, or whether the decision to make that transition was largely predicated on the fact that you've been successful. You now realize that essentially you've replaced your 9-to-5 income. I'm just wondering if you actually went into real estate kind of with that that end in sight?
I did. I think, even back in high school, we used to have, buddies of mine, and we talked about starting a landscape company, or I used to always have, business ideas and entrepreneurial type of ideas. So I think, real estate from the onset, I had that vision of it eventually being able to take over and get me out on my own 2 feet and then go from there. So there's a little bit of a story, after leaving and getting on my own 2 feet that we could go into later.
I love it. And so when you did these first couple of deals, as you kind of built yourself up on that journey, the first couple of deals, were they largely funded and capitalized with your own money, or did you bring in any outside investment partners?
No, I didn't. So back on those first few deals, it was, again, using private lending or hard money, and me realizing, okay, if I had, X amount of dollars in the bank, if I put that down as a down payment, 20% down, 25% down, it would take a lot of months of rental income to recoup that capital. So by using the private lending or the hard money, that was the strategy where I learned I could put my capital out, use other people's money, get those construction funds, get the rest of the acquisition funds, and then do what I was supposed to do, execute on the project, and then within the 6 months, or at the 6-month mark, I was right there at the door, ready to do the refinance part of it. So I would recoup my capital, and then I would go ahead and do another one. But again, it was always a little bit of a slow grind, one a year, maybe skip a year, depending on what my workload was with work. It definitely affected things. From 2008 to 2021, got married, had 2 children. So I've always had a conservative mind and making sure that we had a roof over our heads.
Sure.
So I think I was able to build a really good foundation using that strategy. But realized, over the last year or two, that's great to get you here. But now to get to the next level, it takes, things like capital school, working with you, Brad, and knowing, what those other opportunities are. And there's definitely a clear transition in my mind, to how to get to the next step.
Sure. No, absolutely. In the book, Rich Dad, Poor Dad, Robert Kiyosaki says that understanding how to utilize other people's money, we call that OPM, is really one of the keys to accelerating your business and unlocking tremendous wealth. At what point in your business did you make the decision to perhaps consider or look at working with outside investors? Like, when was it for you that you started exploring that?
So the beginning of 22, leaving the full-time W-2 job, I came right into operating a small private lending business. So now I became the private lender. I became the hard money guy. So I think that's what's really, led me on the journey of saying, hey, we have some private capital out right now, a decent amount. I have a business partner. So between the two of us, there's good money out there working, making money. But it's really the amount of opportunity that we have right now. There's, I work closely with, and I do have my real estate agent license as well, Mass and Rhode Island, so affiliated with Century 21. And in the brokerage that I work out of, there's 250 agents, and really they're out there finding deals and working with other investors that have deals. Our broker Kyle Seaveth, he's into developments, or taking mill conversions, school to residential units, ground up construction. So I think it was eye opening for me to say, hey, there's so much opportunity where good money can make even better money. So by accessing other people's money, being able to provide them a return that they can't find easily otherwise. Really, it's connecting those, right? So you're connecting the other people's money, connecting it to these great opportunities, great projects with these good returns. So that's really has me energized right now to start raising capital.
Great. So let's talk about those early stage investors that you started with. You obviously, wanted to work with investor capital. You started this lending business. Was it largely just reaching out to an existing audience that you already had, family and friends, people that you knew, that you had in your sphere of influence, or Were they new people that you had to essentially create new relationships? How did you go about the process, so our listeners get an understanding of really how you went out and, didn't raise a tremendous amount of money, but certainly, over $1 million by a lot of people's standards, that's a lot of money.
Yep.
And so how did you kind of begin that process?
Yeah, sure. Yeah. So, well, I think we're at about 1.5, 1.6 right now in 12 months or less. And that's come through probably each of the channels of what you just mentioned.
Okay.
And again, there's definitely a business plan and aspirations to raise much more than that to go towards these other types of projects. And there's another business too that I have an ESG opportunity that we can maybe touch on a little bit as well. But I would say that, yeah, so some of it was, relationship based, and others were, maybe a referral over.
Yeah.
But I've always said, hey, let's sit down, let's meet in person. Let's, but obviously, you have the phone call, you have, some conversation. And really, I think when people meet me, they automatically start to see this little bit, there's transparency. I always, thought it was important to discuss the concerns or the potential objections in my conversations with them. I've always brought those up naturally in my conversation. And at your Miami boot camp, it resonated well with me when you shared that as a good piece of advice for your audience, to do that. And I think that's just something that really goes a long way. So to elaborate what I'm saying is if someone says, well, it sounds interesting, but I think it's too risky. I like to start outlining, what the risks might be, how we mitigate them, what we do, the fact that we have an an application that my years of experience in real estate and construction, that I go out and see each and every property. I know where the money's going. I interview the client. I always say the value in what I do is I'll say no to deals, right? We don't just take deals to take deals. We take on the good deals. So yeah, I think I've been able to work with folks that aren't familiar with me, and really show them what we do, how we do it. Sometimes terms are a concern, so I'll say, let's go with a 6-month term instead of a 12-month term, and we can compound. So if you do a 6-month term, it's not ideal for cash flow management, but it really goes a long way for the investor. So let's do a 6-month term, and then after the 6 months, the light is a little bit closer to the end of the tunnel, and we can talk about re-rolling that capital. Now you have the compounding interest effect as well. So
yeah, absolutely. I mean, you live in a kind of a tri-state area, Rhode Island, Connecticut, Massachusetts. Those 3 states are so close to one another.
Right.
With obviously the change we've seen in interest rates over the last 18 months, obviously with inflation, have you found investors a little bit more concerned, kind of sitting on the sidelines? Have you found it harder to commit capital? How has the environment we're in now, which is very different than what we were in 2 years ago, affected your business? And more importantly, what strategies are maybe you looking at to respond to that?
Sure. So I think even coming into just the most recent past, for a little while now, there's been an issue with inventory for investors, right? So, buying on that MLS, years ago, you could do it, and that went away. Then, obviously the mailers and wholesaling, but I would say in general, just really seeing investors get sidelined because they can't find deals anymore. So some of these alternative investments are offering these other passive type investments become a little bit more attractive. So that also works, hand in hand with our business strategy. But yeah, I think right now it's more on there are deals out there. There are a lot of deals out there, like you mentioned. So where I am in southeastern Mass, we have the city of Fall River, the city of New Bedford. There's the train from Boston, or the T, is being introduced into these areas. They're not even up and operational yet. So there's a lot of interest in those areas that are helping keep deals that hit the market. They're still going quick. Same thing, Pawtucket, Rhode Island. The train's going there. So I think, right now we're in an interesting space where you have to underwrite your deals, a little bit tighter, make sure that there's the right skin in the game, make sure that the borrower has, multiple exit strategies. I've been telling investors for a little while now, especially if you're starting out. Personally, I don't suggest a single family flip as your first, in a real estate project right now. If you can find the 2 family or the 3 or even the 4, now you gave yourself 2 exit strategies.
Right.
So, yeah.
Yep. No, absolutely. I think that a lot has changed in the last 2 years, and I won't say it's become more difficult. It's just you require new strategies. You need new disciplines. Let's talk a little bit about your business today, Limitless Capital, and what you're doing there. What is it that you're planning to do with Limitless, and more importantly, what is it you hope to accomplish with the new fund that you'll be raising capital on soon?
Sure. Yeah, and I think I alluded to it a little bit before on some of these larger development projects. So Limitless Capital will be SEC registered and state registered fund. So what we're looking to do is really raise prior to the fund, it was, like I said, it was more of a syndication, more deal to deal. This is really an opportunity here where we can, because I know and we do have such a demand right now for the capital, for the deals. We're gonna offer investors access to a fund with a strong return. I mentioned and have talked most of today about the real estate side, but I'm also a co-owner of an indoor agricultural business, and so having an ESG opportunity for folks, I hope and I think is attractive as well. And what we're doing with that business is going to really could have a great effect on the fund as well. And there's scale opportunity there. So seeing the droughts and seeing what's happening out in the western half of the United States, and really just with food production and where it's coming from, folks now are more concerned than ever the quality of the food and what's really in it. Really, now that you go into McDonald's and Burger King and seeing plant-based, meats, that's something that really shines light on kind of this movement. So yeah, the agricultural business that I'm also again a co-owner of. We'd like to raise capital for it, and we'd like to introduce technology and robotics. And if you think about what you see today in the auto manufacturing and what that looks like, I think there's a tremendous opportunity to change the view of agriculture. So.
Yep, I agree. It's interesting. I was on a call just about a week or so ago with another gentleman in Canada that is in a very similar space. There's different types of technologies, obviously, in the agricultural space. One, of course, is hydroponics. And then the other, of course, is, I forget the name of it. It's where you largely have fish.
Aquaponics.
Aquaponics, yeah. Yep. And then obviously, the fish droppings become the fertilizer that basically fertilize and provide the nutrients to the plants. And it basically just becomes this huge ecosystem. Right. It was really, really amazing that he's raising capital on that and now wants to install large projects strategically throughout the United States because there is a shortage on quality food. So many pesticides insecticides are used today in our crops. Why? Because insects, and obviously that's absorbed into the produce and obviously has side effects that we don't see in the short term, but obviously have long-term effects on us as humans and of course to other animals. And so certainly something like that can be basically a large self-contained facility where you no longer really have a need for pesticides and insecticides, whether you're using, aquaponics or hydroponics. It certainly makes a lot of sense. It's, of course, then on the distribution side, the supply chain of how you get that out to the market, to the grocer, to the end consumer. Absolutely.
Yeah, absolutely. Yeah, and there's a lot of sustainability conversation around that. The water conservation. You're not spraying fields of dirt and having it re-evaporate. So that there's lots of benefit to having a controlled environment. So yeah, like I said, I'm excited about that space, and I'd love to talk to anybody that's interested in hearing more about it.
Yeah, so let's talk a little bit about raising capital. The $1 million, $1.5 million that you've raised that's being circulated through your platform, the fees that you derive, obviously the money that you've made. How has that changed things for you, Chris? And more importantly, what has it allowed you to do in your life? And what has the real estate investing allowed you to do in your life that you weren't able to do before when you had a 9 to 5?
Yeah, so I think the first thing that comes to my head is networking. And I, I was at a network event this morning, and the gentleman sitting next to me was saying, when you think about a network and the paths that this might get you to, you don't know, right? So that one connection, that one introduction, that gets you to the next one, that gets you the next one. So there's really a tremendous amount of energy that comes with it when that starts happening. I think I was always, just a quiet guy. I wouldn't be on a podcast. I wouldn't really be, much, with a social media presence. I wouldn't be at much of the real estate local events. I just, was so consumed with my job. And then, folks would look at me and say, how do you do what you do? How are you doing real estate in addition to that? And how are you managing these properties? And so I think I've always had the plate so full that coming out of it right now, I think really finding the time and finding the value in networking and making these other connections in business, and really from there, I think it's scale is the other thing I think about. As I'm I came out of the the barrel on fire. It was like, here we go. Took on went from one or two flips a year and one property to, okay, let's do 15 this year. Let's buy another 10 units. Let's do this indoor farming business. Let's do this. Let's do that. And really just taking on all these exciting ventures. But then I think right now really understanding, hey, take a minute and look at these and how can you set these up, structure these so that they're scalable as well. Yeah. So I think with the fund, it's the same thing. Today that I was interviewing and looking to pick up some more underwriting support and really making sure that there's a strong core team, and then that we have the good ancillary support, and then beyond that you start getting into these ancillary business opportunities as well.
I think you hit the nail on the head, and that is you've developed the ability to juggle a number of plates at the same time. You're doing the lending, you're doing obviously the other business, where a lot of people are stuck. It's like, they have what I call analysis paralysis. They want to do something, but they're stuck and they're just not moving forward and not taking action. I think you've been a great example of somebody that just, takes action. It's like, you want to do something and you realize that you just got to get started and make that decision, because nothing really changes. You don't create any momentum. You don't move forward in life without committing yourself to doing something. And you certainly have been a great example of somebody that takes action and makes a decision to move forward. Because I tell people all the time, look, I'm here, you're here. We could have this conversation today, or we could have it a year from today. But until you make a decision to do something, if we reconnect in 12 months, more than likely you're going to be exactly where you are right now.
Exactly.
It's just unfortunate, that people waste all of this time in life. I was on a call earlier today with the guy in Vancouver that unfortunately has come close to losing about $5 million on a big $22 million pre-sale office building that he acquired or wants to acquire in Vancouver, and then go in and build out a space very similar to WeWorks or Regis, one of these office spaces. And he just has been unsuccessful because his interest rates have gone up. The lenders have kind of got cold feet. And he said, I first learned about you 18 months ago and I didn't do anything. And I wish I did, because I would be in a completely different set of circumstances today than I am in now, had I learned how to attract and raise capital. And I said, well, there's never a time that's too late. My recommendation is, get to my boot camp next week, begin the process, commit to doing something, because at that boot camp, you might meet the one or two people that can help you raise that capital much quicker than you trying to do it on your own. It's exactly what you said earlier, Chris, and that is, networking, building teams of people, and understanding that you're really only one person away from connecting to somebody that can open the door or dramatically change things in your life, because each person is connected to their own network. And you never know who that other person can connect you with that can then open the door to new opportunities. And so that's a real key thing that I always talk about, in the fact that with capital, there's really three different types. And a lot of people don't really see this. They think, oh, capital's capital, it's just money. No, there's relationship capital. It's once we start working together, who are you connected with that you can introduce me to? And then, of course, there's also the intellectual capital. A lot of people have the knowledge that they can impart to you where they've already done exactly what it is you're trying to do. And maybe by working with them and bringing them in as a small investor, they can then be added to your board of directors or become a strategic advisor to your fund and provide that intellectual capital and give you that feedback to help you just do a much, much better job of exactly what it is you're trying to accomplish. So listeners, remember this, there's three types of capital. Don't have the conversation with somebody about just money. Try to figure out what else they can bring to the table, because you're going to do a much, much better job of deepening and strengthening that relationship with people. Absolutely. So
Yeah.
talk a little bit about kind of the next steps for you. You got the fund that you're going to be launching soon, Limitless Capital. We're assuming that you're going to be wildly successful and go out and hit it out of the park. What do you have your sights on over the next 3 to 5 years as you look to the future? What does the future look like for Chris and for Limitless?
I thought we were going to go a little closer than that. I was about to talk about the marketing strategy and the social media campaign and all those good things. You know what?
Take baby steps, and we could talk about those first. But I'm a big picture guy.
No, yeah. So, I mean, it's 3 to 5 years. Wow. I think I'm the type of guy, like a little bit what you were saying earlier, just kind of taking action on things. I'm the type of guy that can't really sit still, and when you start feeling it, you throw something big in front of yourself, right? Not afraid to take on the next venture. I think my current mindset, is a little bit limiting in saying, hey, let's really get these foundations laid. Let's really get these what's in front of me today, up running, wildly successful. And then where does that take me in 3 to 5 years? I mean, the opportunities that are at hand, it's hard to know. So I don't think I'm going to do a good job at projecting myself out in 5 years, other than I do expect that I'll still be working as hard as I possibly can and trying to help folks. I think what you were just talking about with the network and the connections and the undertone there for me is always to say it's a two-way street too, right? And what opportunities can I help somebody else with? So I would be interested in continuing to grow as an entrepreneur, grow as a business person, continue to gain knowledge. In areas I went to school for engineering, not for business, right? So I think that my journey has been a lot of being self-taught, and some of that comes back to what I just spoke about. Scaling is being comfortable, putting people in places, hiring smart folks to take very important roles. I've always had a bit of a lean in the leadership position, from high school sports. I went to a maritime academy, where it was very disciplined regiment. Did well there. Got some good accolades. When it came to leadership, the company that I worked for 15 years, I can mention it, right? It was General Electric, GE.
Yep.
So GE, really put a lot of value into teaching leadership. I think I've had a natural ability for it, but it was definitely enhanced with that. So I think what I'd like to see in I guess I got myself there, right, Brad? It is the 3 to 5 years that I can really be running and overseeing these companies and managing people. I just said it last night to my business partner. I said I really need to be managing people, not my mouse and keyboard, right? And it's like, so when you're the doer, you're still doing. It's that separation. So yeah, that's where I'd like to see the 3 to 5 year mark is in a zoomed out, more of a much more leadership role and seeing all these things come together.
Yeah. Absolutely. I think that's the progression a lot of entrepreneurs want to make, that is very challenging, and that is to basically get out of the business, quit working in it, and start working on it, where you start delegating, building teams. That's obviously what allows us to scale and grow. where we kind of, remove ourselves, where now we can form relationships and kind of sit back and know that the business will continue to grow because we've hired a great team of people. Let me ask, just as we're kind of wrapping up, you've evolved as an entrepreneur, as a business owner. You're now obviously doing things very different than what you were doing a few years ago. If you could go back and have a conversation with the earlier version of you, what would you tell that younger version that back then you didn't know that you know now that might have had a different outcome? Or what knowledge would you impart on that younger version of yourself that you wish you had known that might have created a different trajectory or created a different life or just put you maybe in a different set of circumstances?
Sure. I have a bit of a silly response, but it's serious because this is the one I say to myself all the time. I say, buy every piece of real estate I could have from 2010 to what 2000, pre-COVID, post-COVID. Geez, the market just kept going up. These properties that I was buying in 2010, 11, and 12, it was like 72,000, 85,000, 95,000. I still hold these properties today, and they're worth over 500. I say, man, imagine if I had a few more of those, right? So, but there's a bit of a contradiction there in whether I would, you look back and I say, okay, buy more, do more. But I think my method, again, like I mentioned, growing a family, making sure that I was doing it safe. So to kind of go back and say, hey, be less conservative, be more aggressive, would probably be the answer to your question. But that could also have put me in a much different situation than I am today. I did build the foundation. I did, get myself to where I could leave my job and be okay because of the foundation that I had. So, I think maybe, looking at doing everything I've done just a little bit quicker.
Yeah, I think that's the big thing that I hear a lot from people is I wish I just got started sooner. Because of the compounding effect, the fact I'd have considerably more real estate, or I'd be much farther along in this process. And it's what we said earlier in the show. It's, you just got to get started and quit sitting there dilly-dallying, quit sitting on the fence, quit trying to overanalyze. So many people think that there is a perfect time to pull the trigger and do something. And they try to analyze, every nuance of the business. And I keep reminding people, look, when I started my oil company at the age of 23, I had never drilled an oil well. I had no idea where to even get started. I had no idea basically how to put together a ledger and keep books and records to build a multi-million-dollar business. Knew absolutely nothing about the securities regulations. But guess what? I knew other people did. And it's just a matter of, building a small team of advisors around you to help you accomplish whatever it is you're trying to build in life. Get an attorney, get a CPA, find a strategic advisor. Because once you get those connections, you can start moving forward and making progress. And so for the listeners that are stuck or that are sitting on the sidelines, Chris has been a great example of somebody that was able to basically fire his boss, walk away from a 9-to-5, a corporate job, now having much more freedom, now building his legacy. And so listen up, folks. He's a great shining example of what you can do. I certainly am as well. But there's never going to be that right time. The right time is now. The right time is you got to look yourself in the mirror and just say, hey, it's time to move forward. Let me make the decision, because the word decide has very interesting roots. It actually means to kill off. So if you look it up in the dictionary, the word decide largely means to kill off, but that's why it's the root of words like pesticides and insecticides. We use them to kill things, but what you're really killing off is the indecision. And, it's really the indecision that is keeping you on the fence, that is preventing you from having the lifestyle and doing the things in life that I believe you can do as listeners. But more importantly, you got to start believing in yourselves as well. Chris, this has been a great episode. I really thank you for coming on and kind of sharing your backstory and, more importantly, talking about what you're doing at Limitless. For anybody that wants to follow you or perhaps maybe connect and take a look at your fund and what you're doing potentially as an investor, or maybe somebody that can work alongside you and possibly help assisting in raising capital, what's the best way for them to connect?
Yeah, I think the best would be through an email, Chris@limitless.capital. And I'd love to connect with anyone that'd like to hear more, talk more, I'm happy to, for folks that are just starting out, and any questions that, I might have made you think about, any mentorship opportunity, I'm happy to help talk about anything, for any serious investors that are looking for a good opportunity in the funds that I was able to talk about today. Again, I think we have some really great opportunity. And Brad, if you don't mind, just for that last piece that I think that you throw out for your audience that I think is important, right? About just doing something now is the time. I always look at everything where it doesn't have to be the full pie, right? Just break things down into smaller pieces, whether it's anything that I do and anything I look at, I always try to say, okay, how do I break that into a bunch of small pieces? And when I do that, you take that first piece and throw it in front of you. Throw the next one in front of you, and now it's not so overwhelming, right? And that you could use that in any type of business or life situation. So, thank you so much for having me on, Brad. This is excellent.
No, you're very, very welcome. Listeners, this has been another great episode of the Capital Catalyst Show, where we meet regularly to discuss attracting and raising capital so that you can go out and accomplish bigger things in life. Like I say, it's my belief everybody has a dream, but a lot of times those dreams are diminished or extinguished because you don't have two nickels to rub together. So keep showing up. If you like this episode and the other episodes that we've aired, do us a favor. Click the link on the episode, give us a thumbs up, but more importantly, become a subscriber so that you can be made aware of future episodes and, more importantly, new speakers that we bring on a bi-weekly basis. This is Brad Blazar saying we'll see you next time. And thank you so much, listeners, for showing up today.
Thank you, Brad.
You've been listening to the Capital Catalyst Show with Brad Blazar, the best place for entrepreneurs interested in doing something big in life, having considerably less stress, and a more balanced life. Go to bradblazar.com for more ways to accelerate your success.